It takes a crisis. It takes a true crisis. For people to come together, they need to feel a similar pain. They need to be united by something. Right now, we are in deflection mode by politicians, and we are able to kind of make people angry at one another because nobody has a shared enough anger.
Whoa, spooky season. There's nothing scarier than a boring market. Am I right?
Nothing scarier.
There's nothing scarier. Maybe that CapEx on Meta is a little scarier.
What are you dressed as?
I'm dressed as a retail trader who doesn't know about risk management.
Cem had a little costume he was showing us from the Star Wars universe.
We're going Jedi. We're going full Jedi today. Obi-Wan Kwasanti.
Yeah, there you go. Yeah, you should be an Iron Condor or something for Halloween, man. A condor with just like black wings made of metal. Yeah, I'm sure the guys on the options trading floor in Chicago would love that. Eat that up. Oh man, it is spooky out there. Welcome back, everyone. With us is Cem Karsan.
The bottom 50% will not do well under a Build Back Better bill that cuts, fiscal spending to those people and sends it to the top 1%.
Yeah,
that's how it works. The lower income people will not do well if costs are going up, and those need to be passed on to them because things are getting expensive. This is not new information. This is well known and understood. It is what is driving the populism and the frustration. However, the top 10% of the distribution now are more than 50% of all consumption. And that is the highest it's ever been. And if the market's up and their assets are making money, they are not the one, that cohort is doing well. And so this is more than ever, and we've been talking about this for some time, not a monolith. Like consumer is not a monolith. It is broken up into two very distinct parts. It did not used to be that way as much. It used to be, the masses would be the consumer broadly. But now, again, top 10% is more than 50%. So that's a big deal.
One of my questions for you is whether or not that reflexive loop of liquidity is still alive and well today. I would say, I'm assuming that it is.
Yes.
And
yes, it is.
How that could change, like what you would look for to change. But also with rates coming down and QT like coming to an end, it's just no end in sight, right?
Yes. Not only is the Fed now hopped on board, but the administration is going to have more and more power as we go into next year over the Federal Reserve. I would argue it already has a much more than the perceived power. I think they are strong arming those that are still not under their control. I would argue some people would disagree. And so they're going to broadly bend policy towards what they want and eventually have full control. In that context, you've heard don't fight the Fed before. This is, I'm guessing, don't fight the Fed plus the Treasury working together without any friction is probably something you should also pay. What does matter is liquidity, as we've talked about. And the reality is that right now, sitting here going into November 1st, we have a bunch of things, a dramatic number of things that are very positive for liquidity. Never mind the Fed and the Treasury, which we've talked about. Just from a structural perspective, at the market's up 15%, $500 trillion of long assets, give or take, that's $75 trillion of new collateral. Some of it's been reinvested throughout the year, but a decent chunk of that goes to work on Jan 1. And everybody front runs it. This is a leverage machine, and $75 trillion of new collateral is a huge amount. The average amount that moves markets on a daily basis is $50 to $100 billion. It's like it's all just a very leveraged reality. And so if we're going to have, I don't know, $7 trillion go to work on Jan 1, that probably is something that people understand that, and that's incredibly supportive, and people front run that. So generally that's positive, but when the market's up, that's even more positive. So that's good for things this year. The bigger the market is, the more that effect matters because it's a momentum machine.
Tesla dealerships getting set on fire earlier this year as an example of just the rise in populism. And then you go on to say here, as AI's influence grows and the layoffs begin in earnest, the steady and growing populist drumbeat will soon upshift into a higher gear. The next target will not just be politicians. The impulse that will increasingly unite the angry hordes on the left and right will be the shared ire against the top 10 corporations in the S&P 500, which now represent a record 40% of the index's market cap. Expect an increased backlash and an uptick in global antitrust activity. I really like that because we've
like that.
Well, we've been saying that.
So does everybody else. That's the point.
Yeah, people's anger and stuff has been misdirected, and the politicians and the powers that be have been just putting on a clinic in how to manipulate the masses to focus on each other, to focus on immigrants, to focus on
same as it ever was.
Yes, and meanwhile, the real target should be fucking data centers, and I'm not advocating for that, obviously, but I'm surprised that we haven't gotten there yet, and I obviously don't hope for any kind of social discord generally because I think that would be bad for everybody and people could die and whatnot. But I worry that we'll never be able to unite against a bigger enemy, and we're just going to be
crisis.
Stuck.
It takes a true crisis. It takes for people to come together. They need to feel a similar pain. They need to be united by something. Right now, we are in deflection mode by politicians, and we are able to kind of make people angry at one another because nobody has shared enough anger. But you're right. This ultimately is the real anger. It's not just politicians in general. And again, if you're saying politicians in general, it's easy to be like, it's not my politicians, it's your politicians. It's not my policy, it's your policy. But when it's corporations, guess what? Both sides are going to start. Right now, the left has been talking corporations, but the right has not. And what I'm trying to tell you is the more this gets to a point where people are losing their jobs, and not just to corporations, but to AI and the things that were built by corporations, and the economy begins to slow, particularly for the masses, which is what we're starting to see, which is, I think, has always been the main challenge. And if inequality doesn't get fixed, essentially, which, again, we were making some inroads towards it, but now we're moving back away from those inroads. People feel that viscerally, and that brings people's anger, their directed anger to other entities. So my opinion is we are seeing this under the hood. We have seen it for some time. It is growing, and AI will be is beginning to become, and I think next year we're going to see an incredible accelerant to that. And I think that's something that people aren't paying as much attention to as they should. And I think what you will possibly see is a administration which has been very friendly to business as we get towards midterms next year, and as we get towards the bigger election in 3 years, start to have enough pressure on them politically to start to point the finger at corporations as well. And if both sides start doing that, that's when you start getting antitrust and start getting policies that are very not pro corporations.